Hi everybody, this is Bruce Roth. I'm a real estate broker with Keller Williams Realty Southwest here in Nevada. And I have today as my guest Victor Taube. He's been a certified public accountant for 52 years. And he's gonna tell us a little bit about how year-end expenses are handled differently than throughout the rest of the year. Can you tell us a little bit about that?
Absolutely. The IRS puts everybody...
That's the door.
Okay.
I'll be right back. Oh, it's the delivery. Let me lead it back into that, and
Okay.
this is the delivery sitting there. Hi everybody, this is Bruce Roth. I'm a real estate broker with Keller Williams Realty in Hi everybody, this is Bruce Roth. I'm a real estate broker with Keller Williams Realty Southwest here in Las Vegas, Nevada. And I have as my guest today, Victor Taube, who's been a certified public accountant for 52 years. He's going to talk to us a little bit about how year-end expenses may be handled differently than throughout the rest of the year. Can you tell us about that, Victor?
Sure. Basically, the IRS, when you figure your tax return, the IRS requires you to be on a cash basis. So if you spend something, you can deduct it either as a business expense, as an itemized deduction, however it might be on your tax return. The only thing that they do allow, which is actually not on a cash basis, is any expenses that are spent through a credit card. And it doesn't make any difference when in the year you do that, but if you do it at the end of the year, for instance, the credit card expenses are deductible in the year in which they are made.
So that means if I go to Office Depot and I buy a couple $100 worth of paper and ink and stuff like that, and I charge it on my card on December 15th, but I don't pay the bill till January 14th, I get to write it off in the current year rather than the following year.
You do, absolutely. And one other thing too, I would like to suggest, those of you who are making estimate payments, it's best to, if you have estimate payments, maybe not, obviously not to Nevada, but to other states, if you have investments in other states, if you make the estimate payment in December, it will be deductible in the year that you make it, as opposed to if you send them a check January 15th, which is actually when it's due, then it's not deductible until the following year when you made it.
And say that would apply both in California as well as your federal return,
Right.
For instance.
Right,
Okay.
right. The federal return, if you make your estimate payment on the 15th of January when it's due, it is deductible as a payment in 2014, for instance. So that's not exactly the same thing, but if you
on the California state return,
if you made a California state estimate January 15th, federally it wouldn't be deductible until 2015, even though it applies to 2014 because you're on a cash basis.
Okay.
Okay.
Thank you so much.
You're very welcome.